Well, we're back with you. I'm Marlin Bohling, your tour guide to the ag commodities. I was watching the markets here right before we came back on, and during the break, I noticed that in, let's say the last 15 minutes, we had a big jump in soybeans for some reason, and hopefully we can get some answers about that here in a little bit. Let's take a look at what markets are doing right now. Let's start with the corn board, and our quotes are from bar chart. Now, on corn, we are still lower, but we're off of our lows by a little bit. We have December now at 486 3/4. Now we're down 3 3/4 cents on the day. We're about 3 cents off of our earlier low this morning. These soybeans are kind of fascinating today. We had some weakness early on. We had November going down as low as 13.59.5, and now all of a sudden we're back up to 13.69. About a 9-cent gain there, 9.5-cent gain. And most of that happened here in the last 15 minutes. Now we're within about 3 cents of our earlier trade from overnight and this morning. Now you have it trading 8.5 cents higher, and that nearby September is up 7. Now let's check out the wheat, see if it's changing course. It was under quite a bit of pressure earlier. Well, we're coming back a little bit. December Chicago wheat down 7 at 632 3/4. We have rebounded about 6 cents now from its earlier low this morning. And in Kansas City, the hard red wheat, we have December now just 2.5 lower at 761 1/4. There again, it has rebounded about 6 cents from its earlier loss. Now in Minneapolis wheat, December is currently 1 tick lower at 803. It's hanging on to the $8 benchmark. It got as low as 797 3/4 before it bounced. So now it's about 6 cents, 5 or 6 cents off of its earlier low today. We're also 6 off of our earlier high. In the cotton trade, you have December now just 9 points higher. It's at 85.91 per pound. It did get as high as 86.40 a few hours ago, but anyway, it's hanging in there, not too far from 86 cents right now. On the phone, we have Chris Swift with us, and he's with Swift Trading. He's based in Nashville. And Chris, I didn't know if you heard anything on the squawker here a little bit ago about what happened with this soybean trade here in the last few moments. Any idea?
No, I don't think anything that just spurted it the last few minutes, but I'm going to pretty much preach the same sermon I have been, and that is that we are 2 million acres shy less this year in beans. We don't have as good a crop as what we thought, and now our second crop is having to grow in this oppressive heat, and also the blooming. The rest of the crop is blooming right here at this point. So I think regardless, I keep hearing that the Pro Farmer Tour finds good fields, bad fields, but we're still several weeks away from determining what kind of bean pod count we're going to have and what that actual yield is going to be. So when we look at the markets, we know we've got plenty of corn acres. The yield is not too bad right now. Wheat is being dominated by the Russian factors and a real aspect to plant more wheat acres this year. So beans are right now, due to their bioenergy needs or for the bean oil, and just the market moving up here in the face of the other two not, suggests the beans are pretty strong. And today we started pushing technical indicators back up again. I just don't think it would take much to start sending beans higher.
Now, the corn market seems to be more following the wheat trade than it is the soybean trade right now. Is that really the case, do you think?
No, I don't. The protein contents between the two are not equal enough right now for a feed, or the price is not equal enough or divided enough to cause one over the other. Again, I think it is simply corn has 4 million acres that relieves some of the issues with yield. And then with the wheat market, again, completely dominated by the Russians and all of the impact they're going to have. And world wheat supplies just aren't in jeopardy at all. And so anytime they can come in and undercut that price, selling out from underneath other world markets, then there's not a lot we can do about it.
I do want to take a look at our West Texas Intermediate crude oil market, see what's going on there today. And right now, it's a little bit lower. We're showing October down 22 cents. Now we're at 78.68 per barrel. We're off of our earlier high by about 60 cents. So keep that one in mind. Also on the U.S. dollar index, it's still 277 points higher again this morning. We're at 103.610. It has eased off of its earlier high by 250 points, but still higher nonetheless, and that always puts a little bit of extra pressure on our grain sales overseas. Dow Jones Industrial Average, pretty quiet. September futures down 96 points at 34,426 right now. We'll come back in a moment and we'll examine our livestock trade with a little help from Chris Swift. All right, well, we're back with you talking with Chris Swift about our markets, and now we're going to focus on our livestock trade. Here we go with live cattle, and right now you have the October contract 17 cents higher at 178.85, and you have December just a nickel higher at 182.97. Now, the far out deferreds, February and April, are 20 and 30 cents higher, respectively. Still pretty quiet, but maybe just a few pennies higher than they were last time we checked. On the feeders, they're getting a little more momentum behind them. You have September now up 87 at 249.45. And you have the October contract now 97 higher at 251.85. In both cases, we're at least $1 off of our earlier lows this morning. In fact, October is now $1.10 off of that. In lean hog trade today, you have October up 82 cents. You have the December contract now 40 cents higher. It's at 71.45. Now, the gains get less as you go further out in time until you get to May, and that one is actually showing a price 70 cents lower way out there. Well, let's go back to Chris Swift and talk about this. Chris, I know you're one of our resident cattle market experts here. What's going on with the cattle? Why are they drifting along today?
You know, I think, Marlin, is every price for every sector of cattle or even into the beef sector is at the tip top, whether it's historical or close to it. It's right there at it, and nobody really wants to be the one to extend themselves out too much at this price level. We see a lot of economic factors going back and forth. Are we really going to inflate again? Are we going to go into a depression? Or are we going to have a soft landing? Nobody really knows these things. So we're kind of seeing the producers hold back from being aggressive in bidding. And I think unless they see the cattle feeders see some great need out there or is under duress, I doubt very seriously they're wanting to pay any higher prices than what we see right now. And based upon the corn price and the cost of gains, they're just not seeing the lower corn price cost of gains in order to justify these prices in the feeder cattle. However, they're still here. So somewhere somebody's sticking their neck out just a little bit.
I'm a little bit surprised here, Chris, by the really low export sales numbers we had on the beef last week, and yet we're eking out a higher trade today. I'm not sure what that means, but that's somewhat impressive.
It is. Domestically, we all remain very confused to the consumer's ability to continue to pay. Myself, others that I have listened to that I highly respect, all have the same thing. We can't ignore it because they are, but we question how much buying power does the consumer still really have. And then if they do turn just backwards a little bit, what does that mean to the beef market? So our export sales have been bad. We're going to import a whole lot more beef than we're going to export anytime soon.
Okay, well, thank you, Chris, for all the information this morning. Good to hear from you again. Chris Swift of Swift Trading in Nashville with a look at our market action as we get closer to the midday. How you doing so far? You holding up in the heat?